actually everyone is getting the long end of the curve wrong. Betting against Besant is a very gutsy move. He's like chief hedge fund manager for the US, like effectively. Everything is prompted by geopolitics at the moment. Going back to the era of statecraft, market strategists, I think, are just completely, still behind the curve.
Isabella Kaminska is a veteran financial journalist and former FT Alphaville editor.
Known for sharp, contrarian takes on markets, money, and geopolitics.
Stablecoins are a mechanism for statecraft by the US. You maintain currency hegemony, but without the downsides. And I think Besant understands that more than anybody.
Hey guys, we hope you've been enjoying our content as much as we do ourselves. For us, it's a privilege to be talking to all these interesting experts all the time, to get them on the show. Every time we walk away with new insights and signal about the world and what's happening in it. And we hope it's the same for you and you get a lot out of it. Also, we want to bring this Less Noise, More Signal show to a new level. We just launched memberships across platforms like YouTube or Spotify, so you can become a supporting premium member. For this, you will get early access to episodes. You will also get bonus content episodes where I share my thoughts on the current market, on the price of Bitcoin, where we're at. Also, we will keep on philosophizing about everything, which is the grand scheme of things, the big picture. Where is the world of finance going? What role will crypto assets like Bitcoin play in this world? And then also we'll add nuance to the discussions that we have with our guests. So think of becoming a member, check it out. It would be much appreciated, your support. And yeah, last but not least, also don't forget to like, subscribe, and regularly comment on the show. This would help us a lot, especially with the algo. So thanks a lot for everything and catch you later. Hey guys, welcome back to Less Noise, More Signal. After a really short summer break, we're back. And today we're pleased to be joined by Isabel Kaminska. Isabel, I've been reading a lot of her stuff throughout all the blogs that she's had and then the articles you've been putting out. Very, very astute and great things. And so I'm very happy to have you here finally on the show.
Thank you for having me. It's a great pleasure to join you this morning. Do you want me to introduce myself a little bit for you?
That would be good. As far as I know, you recently started your own Substack. You've been with several media outlets. But yeah, if you could kind of unpack this, that would be helpful.
Yeah, sure. So I've been a journalist all my life, finance focused. My biggest sort of, I guess, longest serving position was at the FT for 13 years, where I ended up as editor of FT Alphaville. And Alphaville was a very special entity. It was of the era of, it came of the age of the blogosphere. And that was a very unique time in finance writing. It has since evolved. It was a kind of ongoing iteration of a thing. And these days it's a bit different to what it was like when I was there. But that's really, but before that, I've been at CNBC, Reuters, lots of other finance places. But I think that's really where I developed a name for myself. And then after that, I left Alphaville in 2022, very early January, because I had let's just say the FT had sort of evolved in a way that I wasn't so happy about. And I decided that I wanted to start my own thing. So I started The Blind Spot, which was intended to be a sort of off the books Alphaville. And yeah, it's still going. It's harder than I appreciated starting your own media service. And certainly I think on my side, I had a few personal issues. So I ended up having to go to Politico for 3 years just to help bump up my let's just say income. And so I was another 3 years in as senior finance editor at Politico, but I've just left there, and I'm really happy to be independent again. I'm focusing on the Blind Spot. I also launched. I had 2 tiers on the Blind Spot, which was a really bad idea. Don't ever do it. And to kind of phase that out, I launched a pop-up called The Peg, which was intended to be stablecoin focused publication because I got really into, I've always been into stablecoins, but I thought it deserved its own dedicated little Substack. So I'm going to keep going with that. Doing two things at the same time is a bit much, but it's sorry, having a small distraction here, but yeah, it's all good. Yes, so we're going to see how it goes. And meanwhile, I'm also now doing columns for the Telegraph. So that's who I am. And again,
Great.
just to wrap it up, I'll say my specialization for your viewers who maybe don't know me is very much finance, central banking, crypto, like payments, commodities. I'm a kind of finance polymath. But I have areas, obviously, that I don't know very much about as well, because you can't know everything.
No, you're exactly right. But yeah, you strike me as somebody who has a lot of knowledge on exactly these topics. And that's why I wanted to bring you on. And also to your point of turning a journalist, or like journalism being hard. I started as a journalist as well. And then now I ended up in banking just because everything that you just told us like resonates with me. If you want to start your own stuff, it's tough, and you really have to grind through. So
it's
I
tough, and also I think it's a different era. I think things have evolved in a way that means there's just so much more competition, and journalists are not. We write about business and finance, but I think we are not naturally predisposed to being good at actually doing business and finance.
It's just fascinating how everything like evolves. Also like with the podcast, this just kind of evolved into something where usually, I mean, you're not being paid to go on a podcast. It's just like this unwritten law that you do stuff like this. And then with journalism in general, I feel like that's my experience, at least here in Switzerland, with the bigger publications. They always try to pay me in views. They were saying, look, if you write for us, you get a lot of exposure, and one or twice it might work out and it's cool, but then after all, I'm like, well, I can't live off views only, and so it's a hard area.
This is the issue. Monetizing media is pretty hard. Although, anyway, so I guess I'll just wrap it up before we go on to the core topics you want to talk about. Is that I think journalism deserves a new model. I have a few ideas. I've also been trying to kind of reinvent media, but it's very hard. It's very hard to do it because journalists are impossible to organize because we're all very independent, and coordinating in our best interests is not something that comes naturally to journalists.
Yeah. I know. I have a couple of friends who tried it as well, and it never really worked out so far. But maybe at some point somebody will find the secret sauce, and then we'll see. It will be reinvented. But yeah, let's maybe move over to the main topics. I mean, usually I have like this one or two strains that I want to talk to people about. This time I feel like so much is happening, and as I said, you strike me as somebody who has this uneducated view on a lot of things and can connect all the dots. So if we can maybe do this, that would be great. But starting, I guess, would be around, what's been happening in the US just recently with these US Treasury buybacks and then, the Japanese intervention we saw just a couple of weeks ago. And what do you make of this? And because a lot of people, especially on X, are freaking out about it, so to say. This is where the Less Noise, More Signal community goes one layer deeper. Become a premium member on YouTube or Spotify for member-only videos, early access, and our personal view on markets, the future of finance, and the signals we are watching. Join us today and become part of the highest signal community on the internet.
I think that's a fair description of what's going on. So my talent is I'm not a numbers person. I'm not an economist. I'm a journalist. So my job, I feel, is to simplify and try to create sort of a cohesive narrative that can better explain what is going on, more broadly in the world, because it's, very chaotic. And a lot of people, I think, especially when you speak to kind of people in finance, go, well, that's just the way it is. And trying to force a narrative on things sometimes is a bit sort of brute force, there might not be one, right? But I think it's really important to try and create a cohesive narrative. And sometimes that's not going to be correct, but it helps sense making. And And so that's what I do. I kind of try to make sense of things, and not always. Sometimes I'll be wrong, but if you don't put a thesis out there, you're not going to be able to. You need to put a thesis out there to begin with, right? So, and I guess what I do that others don't do is that I look at things from a systems perspective, much more so than a specialist perspective. So when I look at the buyback thing for your viewers, Besant sort of upset. Well, I don't know if it's fair to say upset, but he kind of spooked the market this week because he announced a series of buybacks at the long end of the curve, and in the context of the current sort of media narrative, this is perceived as a sign of weakness by the Treasury Secretary. It's perceived as something that only a distressed issuer would do, that they're struggling to contain rates. The US long bond had hit a record that hadn't been seen since before 2008. And so the established narrative is very much that this was a move prompted by desperation. And, I am a bit of a contrarian, and I look at what's going on, and I think that narrative is prompted very much by a consensus perspective that I want to, I'm not saying it's necessarily wrong, but I think it's important to scrutinize whether we're missing an element here. And that's why, that's the whole purpose of my blog, is the blind spot, is to look at things, is there something else going on here? And, I've been hanging out. I had the opportunity a couple of weeks ago to go to Hugh Hendry's annual shindig in St. Bart's, which was really fun. Got to hang out with some very smart people there who really understand treasuries. I mean, I've looked at central banking treasuries, all these kind of fancy programs for years, but I don't have the kind of forensic understanding of, say, what's going on with mortgage convexity that these guys have. And being around those guys for a week, people like Michael Green and a whole Jeff Snyder and Hugh Hendry himself, David Levison was another guy who's there who has a very key view about what's going on. I was quite shocked to find that there is this other perspective, which is that actually everyone is getting the long end of the curve wrong, and that the natural, left to its own devices, if you just look at market structure, there is now going to soon enough be, there's not enough duration. What they mean by that is that there isn't enough long dated paper. And it's to do with structural reasons in terms of how issuance has kind of evolved since COVID. And the fact that Janet Yellen was also very much focused on bringing things back to the so essentially the Treasury started focusing on issuing at the shorter end, shorter. So the general view in that space is that there isn't enough duration, and it won't take a lot to kind of prompt a squeeze there, largely because the narrative amongst the people who are going with the established sort of doomer narratives and who are underestimating the power of America, they've overpositioned themselves, right? And so meanwhile, you have these natural I'm nearly finished. I know but just to understand, because I think this is key, is that there are just these natural flows, these kind of natural cyclical flows and reaction functions in the Treasury market and the mortgage market, where people always forget about the mortgage market. And people forget because I think, we all come from different jurisdictions. We have different mortgage markets. And in the US, mortgage markets are basically a substitute, the second stop for high quality sort of duration and for all the kind of pension funds and anyone who needs a portfolio of assets that is relatively risk-free. I mean, I know subprime happened, but it's still the case that the mortgage market is a key sort of secondary stop for what you have after, because it's state guaranteed stuff, right? So through Freddie and all the other kind of crazy mortgage institutions we learned about in 2008. But so generally speaking, the natural order of things is that because the US have these fixed rate mortgages, and the vintages kind of evolve as rates evolve. So you have different stock of, there's a big stock of mortgages coming on that people got during the 21, 22 period where rates are pretty high and if you have the opportunity, like there's an assumption in the hedging space that people do these refinancings as soon as they have the opportunity. And because at the moment the back end is so high, these refinancings that were supposed to kind of be that the banks would have assumed happened aren't going to happen because nobody's going to do it. And there's a sort of weird convexity feedback loop, which means as a result, they're going to have to chase duration to unwind their positions that they had anticipated for managing these refinancings that are just not going to happen. And so it doesn't take much to kind of generate what is anticipated to be a squeeze at the back end because there just isn't enough supply. And so that's a long way of saying that we're not there yet, but this moment where Besant is kind of like moving into the back end because that just makes perfect sense. If your debt is trading at 50 cents on the dollar, why wouldn't you buy it back? And then especially like you're basically moving all the supply from back end to the front end. And at the front end, you have control of the rates. Kevin Walsh is now in charge. The idea is that Kevin Walsh is going to, he's signaled very strongly. He's just going to let markets do their thing. So even if Kevin Walsh does nothing, that's a cost-effective maneuver for you. And if he cuts rates, that's an even more cost-effective maneuver for you. So it makes perfect sense for this to happen. And there's a big controversy, but there's sort of debate, like, is it yield curve control or is it not? And yield curve control is kind of like fundamentally something that is effective. It is a type of subtle debt monetization, whereas what's happening here is not debt monetization. So in this case, I think the smart people that I know, like the super geeks in this space, all agree it's not debt monetization. Whereas the kind of idea that it is coming very much from the kind of the people with the narrative that like the US is about to collapse, which is fine. It might be, but it's an agenda-based spin. So all in all, we're here now. People kind of, I haven't looked at the market this morning, but people are sort of saying it's been a bit, it didn't really, the overall effect was very minimal. But I don't think we've seen the end of it. I think these things have to percolate through the market. All these different asset classes have to kind of re-roll. We'll see. I mean, the next few weeks is whether these, this idea that there is a massive shortage of duration and it's going to effectively generate a squeeze at the back end. I guess we'll see if it's true or not. But that's the idea. I don't know if that made sense. Do ask.
No, it definitely makes sense to me. There's a lot of points I'd like to push back on, or at least like double click on. Like when you're saying in terms of this position, that there's out there the mainstream view. A lot of people think like, okay, the US is about to collapse. Rates are going parabolic, and that's why they need to do this. I mean, that really. Was well said, where I think it's also maybe, just the narrative view and not necessarily the only view that is correct, because like the other view that I'm hearing from some people, and I think maybe you alluded to this as well, is that some are saying Besant and Walsh and all the people that Trump kind of assembled, his Avenger team or whatever you want to call it, it's like they're doing this from a position of strength, in terms of like they maybe I want to get your thoughts on this as well. Their main opponent is China, that's why they're doing a lot of this. They want to get also the dollar lower in a coordinated counterattack against China. And then again, in terms of like with the long end, some people obviously are saying, well, terming it out in the sense of that, they're buying back the long-ended bonds, but then they're issuing against it more short-term. That is in and of itself still somewhat stimulative, and maybe, as you said, it was started by Yellen, and Besant is now doing this on steroids. Even some would argue, or there's more to come. Some people like Joseph Wang, you might are familiar with, he has been posting, well, we can just go and maybe cut the long end issuance altogether, and then there's ever going to be less of that paper in the market. And so, to your point, that could then potentially create that short squeeze. I don't know. So,
I mean, because the purpose of the short squeeze is that there are just these structural pent up flows that haven't been allowed to work through the market because of, for not decades, but years and years of, central bank policy. And so if you let the flows just manifest as they would do naturally without nudging them from the central banking side, they are naturally stimulative, because if you have a big squeeze at the long end, mortgage rates come down, which it's in itself is stimulative, right? So you don't even have to, you can stimulate the economy without having to like expend too much of your toolkit, because so you're doing the easing through allowing the structure to kind of return to norm and go back to where it's, usually would be, all things considered, and the supply profile of the curve, right? And yes, so it is. I personally do think there's strategy. I think betting against Besant is a very gutsy move. I think he's probably one of the smartest Treasury secretaries we've ever had. This man knows, the structure of the curve better than anybody. I think, he's like chief hedge fund manager for the US, like effectively. And so, no, I would definitely agree with you.
Want a signal after the episode ends? Every week, we publish a Less Noise, More Signal Substack follow-up for each episode, where we summarize the key points and ideas that matter and give you our own take on what it all means. More context, more nuance, more signal. Subscribe to Less Noise, More Signal on Substack today and stay one step ahead.
Would you say that like this narrative of, these three horsemen or whatever you want to call it, the entire Trump administration, they're actively counteracting China here, because it all adds up to me in my head. But then again, I'm like, okay, is it really their master plan that they're having here?
So obviously everything is prompted by geopolitics at the moment. We're going back to the era of statecraft, something that Michael Every likes to talk about. And I think markets are still struggling with understanding what that means. It's not like we haven't been here before. I mean, the entire like post-war era from like 1940s till, early 70s was an era more defined by statecraft than it was by free markets. And so the free market, we've just, we're of the generation where free market kind of theory was the norm, and that was the way the market, did stuff, but it's not the norm, like in the grander scheme. And so, but market strategists, I think, are just completely, still behind the curve in terms of what it means when politics comes back into markets in a big way, and they underappreciate how much influence politics can have. And this is great in the respect that politics never left the markets in China. China has always been sort of guiding what's going on in terms of its financial market. And so, yes, I think everything is about kind of rebalancing the system and making sure that, I describe it as like China used markets to emphasize and really fine tune its industrial policy. We, on the other hand, are the mirror of China. And so our industrial policy in response to theirs was financial. So we had to do financial policy. And now we have a rebalancing where China is kind of having to step away. I mean, it whether it does or not is still up. I mean, this is the point of the exercise, is to force China to rebalance and sort of diminish its industrial policy and rebalance its economy into a more consumption services and finance oriented free market sort of system as we step up the industrial policy and the politics, right? So we get a bit more of what they used to do, and hopefully you create a sort of balance in the world. But I would also say, and I think this is not a popular opinion, I think it's wrong to just talk about China. I don't think it's correct to sort of think it's the US versus China. I don't see it like that now. I did for a while, but I think the better way to frame it is I see there are really two Chinas and there are two Americas.
Yeah.
And I mean, there are probably many more, but like the two key ones. And so China is the China of the globalized global value chain system. The China whose trade surpluses, we look at it very, very simplistically and we think, well, China generates all these trade surpluses that reinvest in treasuries. cui bono from that. We always think it's just China, but in reality, that's, I think, the wrong view. Cui bono is we benefit as well, because
Exactly, yeah.
their industrial policy blows back into our global value chains. And the reason you never heard any kind of, in my opinion, why what you'd call the Davos set were very happy, didn't have a problem with any of these imbalances for a very long time, is because the multinationals very much benefited from the arrangement, right? So yes, China benefits, but we benefit even more, whether it's from like the margins that we can generate via the global value chains and the multinationals, to whether it's, cheap goods on the consumer side. Like, so that China is a very different China to the China that is now, I call that global value chain China, right? And China sits in the middle, lower end of the value chain, and it's not really allowed to control things. It's basically its economic rise there is generated through salaries, through whatever like Western co-owners, allow China to have. And they've allowed a lot. And for sure, China has developed hugely on the back of that model. But that's not what China wants. China wants control. And so then you have the other China, and the other China is what I call emancipated China. And emancipated China is the China that owns its own value chain, right? It is the China where it's no longer like sitting in the middle as a sort of mid-tier supplier or as a labor center. It is the China that creates branded goods and owns the entire value chain. And that China is going to be so when you look at the trade figures now, yes, that the surpluses are rising, but that's because the figures, in my opinion, don't account. They don't strip out it's the emancipated China is competing with global value chain China.
Very interesting. I mean, to this point, that's always what I've been struggling with, because in the first part of your sort of analysis, you spoke of Michael Avery, and these people, and he's rightly pointing to this view of that many people have, like butt markets, I think he calls it, like, and this, when I first heard this, it really resonated with me. Like, yeah, you're right. I'm a libertarian guy as well, and everybody was like, no, let's just free market work this out. But then obviously it doesn't work. If you have somebody next to the US who's the biggest competitor, they have a closed capital account, they have endless growth that they can subsidize, they have international export that they really subsidize at the cost of import, all these things. If you have that, it's probably hard for a free market economy like the US to compete. But then to your second point, my question was kind of like, okay, how do we then kind of alter this system? Because as you just neatly explained, like we ourselves, even I think people like me here in Switzerland, we have profited off the system immensely, with like cheap goods flooding the Western world. And a lot of things have become cheaper because of these supply chains that have really integrated with China as well. And so like, even the US to some point has probably benefited as well, the normal consumer, maybe not everyone to the same extent, but then, yeah, how do we go back to this more mercantilist or protectionist system? Would it only work out with just lowering our standard of livings by a great magnitude, or like, what would it mean? Like, how could we reverse this without blowing up sort of what has like really given us, materialistically speaking, at least a lot of wealth in the last few decades, like.
Yeah. So I think this is the question of our time. And this is where the big sort of, political fights have been centering the last, ever since Trump came along. And Brexit, that's the ultimate argument, is like, the globalization was really good for us. Like, it created this very efficient system, lower price goods, and it helped the West a lot. And it helped us maintain sort of, I think, control of the global economy as well, because no matter how globalized and international these firms are, a lot of them are ultimately, influenced by Western management boards and CEOs and shareholders. So I agree. However, I think the reason, for the pushback is because it was tending towards what I would call a technocracy, a global technocracy that reminded me increasingly of the kind of Gosplan system in the USSR. So it's all very great. You can leverage all these efficiencies, but it's very much focused not on market feedback. That's the irony. Like the great sort of liberal argument that backs globalization, I think, missed the reality that they had inadvertently created a sort of technocratic superstate, global superstate, where a bunch of CEOs, unelected, gets to decide how to allocate, the most organized economy in the most efficient way. Like China's going to be the labor house, the factory sort of system. Germany's going to make, premium parts. And France is, that is, we're going to put our whatever, marketing teams in France. Like, so you have this kind of, I don't know how familiar you are with the USSR and Comic-Con and Gosplan, but you're kind of managing the economy from a very top-down perspective without any kind of feedback democratically. And, my own view is that, yes, it's great, but the outcome for consumers is what is the cost of that? What is the cost of that efficiency? Is that increasingly everything becomes the same. So everything, because you get consolidation, you end up with these mega corporates. And so everything ends up with what I call a VW chassis. Every car is there isn't really much, okay, there's at the margin. Tesla comes in and breaks the model. But generally speaking, everything kind of converges to the middle kind of bland sort of, what suits the most amount of people. And it's that old joke from Ford, you can have any car you want as long as it's black, and so and then the second element of why it ends up bad is because these technocrats don't really understand and see the cultural blowback and have these, I won't go through the Brexit and Trump kind of, political backstory, but it leaves these communities, it hollows out our industry, and there's just this sort of cultural element. But more importantly than anything, there is a national security element. So it assumes this kind of global Gosplan, assumes we're always going to be in control and everyone's going to love being part of the system, that we're all these imbalances are manageable because we're one happy, clappy family who are happy to subsidize each other, right? And that's just not realistic. And so naturally, just like the Soviet Union, eventually these forces end up, it leads to oppression. It leads to kind of like many of the constituent parts not being very happy about their sort of determined role in the system. They're kind of allocated thing, and you end up with a fragmentation. And this is where we are now. And fragmentation naturally creates you're coming from a hyperscale system and you're fragmenting. That's going to be costly because that's the nature of scaling. So, but on the other hand, there are pluses from it. And the pluses are you get competition again, and you get diversity, and you get like Chinese cars competing with Citroens, or, you get cultural diversity in a way that we haven't had, I think, for 10, 15 years or more, where suddenly, there's a dynamism. Of course, the cost of capital goes up for almost everybody, but you end up in the long run with a better system. And the question, we're more dynamic and more capitalistic system. But the real question is it going to be all offset, that cost of capital? Because we're also at this kind of, robotics, AI inflection point. So never in the history of the world have we really had this opportunity to descale from a mega kind of system approach and maybe not suffered the consequences, because maybe AI and robotics and other innovations can sort of fill the gap in terms of the the cost of that fragmentation. But I don't know whether that's true, because there's all sorts of other questions. But that's the overall that's the systems perspective that I would put out there.
Hey guys, I'm thrilled to share my new book, The Bitcoin Enlightenment, co-authored with Mexican billionaire Ricardo Salinas. Make sure you grab your copy now and learn about how one of the richest people in all of Latin America thinks about Bitcoin. You'll find the link in the show notes.
No, and ultimately, we're, as humans, we're probably in this dilemma, whenever we go from one system into another one. I mean, we're not living in heaven on earth, and so it's there's always new problems and fundamental things are gonna pop up, issues. But I mean, yeah, that's really the core thing that I'm struggling with. Like, okay, I see the total mishmash. Everything is becoming, in German we call it an Einheitsbrei. Everything is the same, and then you're like, okay, culturally it's the same. Everyone watches the same Netflix, and we're just very mushed together. But then again, like it's also like we humans, I guess we are materialistic after all, and a lot of people who have grown up with that sort of wealth. The question is, can we swap out the system without like having to kind of lower our standards and stuff? And maybe, yeah, you're right. Robotics and all these things can help us with this, but that's the key question, because I don't know if it's true, but I feel like the other system, might be less of division of labor, and then we're back to the free market thing again. You said the cost of capital is higher, costs generally are higher. Yeah, I mean, I'm really.
But this is the fight of our times, because I think that is. I mean, I'm being very simplistic. Obviously, it's more complicated, but I think if you really distill what the big kind of, I guess, what would you call it, like hysteria about Trump and Brexit is, it's about the fact that the elites who favor the old system think it's madness to move to a fragmentation model. But that's also because their kind of economic modeling doesn't account for intangibles so yes, you talk about material gain, and there's no doubt that the kind of hyperscaled system is going to be materially better for people. But there are all these intangibles that you lose, whether it's cultural control, identity, you know what I mean.
Yeah.
So there are trade-offs that I think,
Yeah. I hope
matter.
that people can manage this, because maybe we're already like, desensitized, and we're so much about material. This is just, we take it for granted, and maybe we have discarded these cultural and intangibles for so much, and we don't even value them anymore. But I guess the world is showing that people are, and that's why you have stuff like the Brexit and stuff like this happening. And I was wondering, maybe it's not connected at all, but given you're from the UK, because I just recently learned about this a couple of months ago, the Count Binface, this really, this funny looking character. And I was like, is this connected to this at all? Or like, how do you see this? Because it's just weird. For me, politics is becoming ever more into a circus as well. And it maybe might be connected to what we're talking about here as well.
I mean, the whole thing is it's a great story, but obviously the British politics has been sort of undone by, Brexit and the fallout of, effectively increasing amounts of decohesion in the UK. And much of it is to do with migration and the kind of cultural watering down of British values, I would say, across many different parts of the UK, due to just large amounts of migrants. And that's a phenomenon in other parts of Europe as well. And I think politically, the UK has a fascinating, I know the Swiss have a very decentralized political system, and I know it's almost like you've created a political system that purposefully makes sure nobody ever knows who's in charge.
Yeah. We have 7 presidents, so to say, and nobody is in charge.
I love it's great in many ways. But no one can ever name the head of state of Switzerland.
Exactly. Yeah, which is good.
Which is good.
Yeah, exactly.
But in the UK, obviously, we also have a kind of purposefully baked in decentralization and checks on power. I'm not going to go into it, but it's always benefited from two-party. No, it wasn't a two-party system. We had a three-party, 2 big parties, 1 little one, and that worked for a very long time. And our model works best with that kind of approach. But because of Brexit, we have had this fragmentation politically, and reform, obviously the collapse of the Tory party as a result. And reform is beyond that, something the Swiss don't have to the same degree. We have something called the establishment. And what is the establishment is very hard to actually articulate. But my reading of what the establishment is, it's the kind of old money, it's the old system, it's the House of Lords element, it's the kind of royals and the old wealth, and the establishment pretends it's not, we're a proper democracy and we have a democratic bent. But in reality, there's more influence from the establishment than some people like to, admit. And foreigners don't get this because there aren't that many working royalties in Europe, right? And that's not to say like, the Queen or Prince Harry, has any bearing on this directly. It's more about the sort of legacy. There's a sort of legacy network of old paternalistic aristocrats, I would call them, who have over time become industrialists and whatnot, who have a sort of different perspective. And I think there's a sort of they have more influence over the system than people appreciate. And when things go in a way that they're not happy with, I think they nudge things. And so Count Binface, I mean, I think it's really funny that he's a count, which sort of like suggests to me he's doing the work of that establishment.
Yes.
And he's funny, and like I get it, he's funny, but he's not politically neutral. And I think the funny thing is that he hails from this sort of intelligentsia element in the UK, and he's very funny to the intelligentsia who don't understand the sort of petty grievances of the working classes, the people whose communities are being sort of completely changed by migration. And he has a sort of sneery effect. So he came in sort of being this comedy candidate, which is in the history of the UK quite normal, because we have this bonkers tradition of having these novelty candidates.
Okay.
But his whole modus operandi was to kind of upset and destabilize Reform, which has been gaining ground. And Reform is an outsider party. It's not in any way, under the thumb of the establishment. And that is a big threat, I think. I mean, this sounds like super conspiratorial, but I think it's a reality. I also think it also applies to more fringe elements of Labour. Like, I think someone like Jeremy Corbyn faced similar headwinds. And when you ask like who displaced Jeremy Corbyn, and I think establishment forces have their way of doing that. So it happens on the right, it happens on the left. I think it's that phenomenon. No, people outside of the UK find that hard to follow. But Count Binface lost in the end, so Farage won. But what he won in was that he made a joke of Farage, and in the UK, that has, I think, really impaired his public image. And I think, tied with all the stories about him taking, Tether payments, and the media machine has really done a number on him, very much like they did on Jeremy Corbyn. This is one of the reasons I'm independent, is because I'm neutral. I like to just overview things from afar. But it's very clear to me, if I was a foreign correspondent, looking at the system as a foreign correspondent almost, it reminds me of the sort of dirty tricks that happen in sort of emerging market economies all the time,
Yeah, that was my perception as well. I haven't really followed it at all, but just like seeing this, as you said, a count, but not dressed as a count and just trying to comical. But then, I felt like this is special if something like this happens in the UK. Now you've been telling me you had like these bonkers characters all throughout. So maybe it's not that special after all. But I felt like the British, Polish
we've always
person
allowed, because we see ourselves as like an extreme democracy. So we've always allowed for novelty candidates. So the rules are really weird, and almost anyone can contest an election. And so you've had like the original one was the Monster Raving Loony Party, believe it or not. And the guy was, Lord, again, he was a Lord Suchmore, or whatever his name was. And interesting, they always go for the kind of establishment titles, Count, Lord.
Duke is going to be next, so we'll see. Yeah.
So it's in the tradition of it is in our tradition, but they usually get like 20 votes. I mean, they usually get like literally less than 100 votes, whereas Count Binface got 30%.
Or 30% already. Yeah.
Something like that.
Yeah. No, that's, it's just kind of fascinating. But maybe I want to come back, to, the rates story that we talked about in the beginning. And you mentioned AI. And this is also something I want to bring into the discussion. We know China, US competition, the whole DeepSeek, Kimi K3, and then the hyperscalers borrowing like crazy as if there is no tomorrow. Some people are arguing that's also why the US wants to keep long end rates down, because these are the market rates and they are relevant for bonds, and like the hyperscalers who want to do the borrowing. If they blow out too much, they get in trouble. So yeah, how do you connect this into all of this? And yeah, what's the sort of importance
So
of that?
I think the hyperscalers are really important in terms of like how much liquidity they've been draining out of the market through their massive issuance. And, but I did a post the other day highlighting that I think it's really underestimated the degree to which like it was DeepSeek that prompted the phase of extreme madness on the hyperscaling front. I mean, the people push back and say, "Oh, it was happening already." Yeah, it was happening, but then DeepSeek comes along and it just goes a little bit more exponential. And the question is why? Well, and I think again, maybe this is lost on people because they, the news structure these days is so fragmented. If you don't have, as a journalist, I read. How do I how do I understand things? Like I read as much as I can. I speak, but I also speak to people, right? And I'm informed often, not because I've just read something. I'm nudged or somebody says, look at this. I have a network of sources. And over time as a journalist, you learn to know which ones you discount and which ones are trying to deflect you and which ones you trust, who always give you good tips and give you insight, right? And some of them I quote, some of them I don't quote because they are more valuable to me as sort of informants, so to speak. So when I say this stuff, a lot of my analysis is informed not just through reading and just synthesis of inputs. It's because of what I hear on the ground from my sources. And I think the thing that people miss is the degree to which DeepSeek upset the system because it was open weight. And that was the moment my sources were sort of saying, well, this changes everything because we're not going to, the compute we were trying to corner for the model, that's out of the window now. Now it's going to be a pure commoditization of the whole thing. And we're just going to compete on infrastructure and on who has the bigger moat. And lo and behold, they were totally right. This is exactly what happened. And the other element of this is the anthropic side of it. It's just interesting how China is increasingly going open weight and open source and like not open source fully, but like there is this sort of also this like assertion. I mean, they're calling it they're calling it distillation, right? So China is, I don't know if that's just a euphemism for industrial espionage, but the idea is that China is reverse engineering some of these Western models and then making very smart innovations architecturally, which is allowing them to keep up despite not having the capital cost advantage or the kind of hyper access to chips and all the infrastructure advantages, which is ironic. People find that weird because it's like China's usually the infrastructure, king. Why wouldn't it be here? But this is all a factor of cost of capital, and I think it's underappreciated the degree to which China's cost of capital is actually quite high relative to ours. And so you have these Chinese models coming on scene, and all my kind of, I think, again, people underestimate there's like two tech spaces. There's like most of my sources from what I would call the libertarian end of Silicon Valley were super happy about DPC. I was very shocked. I was like, oh, you're happy? And I was like, yeah, because nobody loses here. They were all very upset about like how closed the systems were getting. They were not happy with, it's the old like debate between Elon Musk and Sam Altman, like OpenAI became closed AI, right? So those guys they don't care it's China. They just think because everybody benefits. It doesn't matter if it's a hegemon or not because it is something that is for humanity and they're very happy about it, right? And meanwhile, the American system is sort of becoming more and more closed. And then you get the Leopold factor. Oh my God. So where are we? We're in this kind of weird arms race between models that are being put on the market from China, of all places, that are sort of more human centric, and then the model that has human centric in its name is becoming like misanthropic. So in its weird
ironic,
kind of
yeah.
closed end mechanism, right? So this is what I think is being missed in the big narrative. Now, my other element is that the projection is like everyone thinks they're just going to keep hyperscaling. But I think people again, it's so interesting how DeepSeek came along and it completely, I mean, headlines everywhere for about 3 weeks, and everyone knows, people know about DeepSeek. It's like people, but when Kim Min-cho, like nobody knows about it. There was almost no, I mean, in a very select community online who follow these things, they know about it. But the average normie has not like heard about this. This is it was buried. It was like almost, why? Tell me why. And yet it was just as much of a leap as DeepSeek. And I think it was the main impetus for the blow up of Leopold. Ashley Brenner.
Yeah. No, I mean, it's very interesting that you're telling me that some corner of the Silicon Valley, elite or whatever we want to call it, it was actually welcoming this, because from what I'm reading and hearing, again, a lot of people have been worried that China is pulling up the same thing they have done with the automobile industry. Again, there's overcapacity, flooding it, they're trying to get as much market share as possible. Now they're doing the same to the AI to kind of hollow out, the sort of structure in the US, and that could even potentially then be a problem for hyperscaler down the road, because they get troubles monetizing everything that they've built here. So yeah, I mean, it's just interesting. There's probably different aspects here.
But again, it's about, if you buy into my narrative that there are two Chinas, then you have to understand that one of those Chinas, the global value chain China, is more like what I would say is like dealing with the deep South or the South in sort of in the abolitionist era, right? These are sort of the Chinese who are happy to kind of throw half of the majority of the population on the bus, like basically sacrifice a generation as slaves for the sake of like moving up the, hierarchical geopolitical ladder. And those guys, that's why you have this inequality. The princelings in China, they'd cut a deal with the Westerners, like they were happy to do that. And those guys do not benefit from the collapse of the global value chains, because actually it's like, in some respects, I'm very realistic about China. I'm not a pro-China person, or I just try to be nuanced. Like in some ways, Xi Jinping is the MAGA movement of China, right? I don't think people appreciate that. He's coming in, he's like, no, we're going to take control. And that's why he freaks everybody out. He's a threat to the global value chains. He's not that happy. And his entire ethos from the moment he comes into play is to kind of reestablish some sort of control, right? But not necessarily in the convention. Like CCP is fragmented just as much as the UK is, as much as the US. There are all these different factions there's always these power battles, right? So China is like the China that wants to emancipate itself from the global value chains, and that's the threat. That's the one we don't, that many people see as a threat. And then there's the China that sits compliantly within our kind of global structure.
Yeah.
And the question is, where are these AI models coming from? Which of those Chinas? Which is the China that is it the global value chain model, or is it the emancipated model? And I kind of think it's coming from the emancipated model, but in the sense that the emancipated model is allowing for this hyper competition, this incredible innovation. And you often hear, on one hand, the Chinese are fudging everything. It's, chaos, the defaulting, there's all these kind of assumptions that they do things, half best. And then you've got this other China, which has the best scientists who are, people testify to the innovation coming out of China. It's real and really changed, and the capitalistic sort of mindset really, really hyper competitive in that space. So I think the models are coming from that space. And if that's the case, then the question is, why are they making them, if they're so concerned with hegemony and being the global, leader, then why are they giving them away? Why? I haven't got a good answer for that. Why wouldn't you make them closed?
No, I know what you mean. Yeah. I would have to ponder over this as well. Yeah. Mm-hmm.
So my read is that in some ways we, through having these closed models, are trying to do it. The purpose of our closed models is it looks to me like to create a monopoly for rent extraction, right?
Uh-huh.
And I think whether China is good or bad or gonna like attack Taiwan or not, the reality is that they are they're trying to kill the extraction model within China itself, right? So naturally, they wouldn't want to. I mean, I don't know. This is me just like spitballing, but I would imagine you've just been on the receiving end of a very extractive model that has effectively mined your population for a very long time. You're going to be very wary of competing on a closed basis because whoever wins is going to be that's the risk, right? Isn't that the ultimate risk of of a closed system model winning the AI race? I think it is. That they end up with complete control over how AI is distributed. And it could be bono from AI, right? And I think for China, it's really important to they have a PR mindset. Their propaganda is off the charts. And I think this is a very easy PR win for them. No? I mean, what do you think?
Good question. I'm really trying to think through this as well. But open weight, maybe I just don't understand it well enough to kind of comment, but I feel like, from what I'm hearing, a lot of people, when it comes to other stuff, they have been kind of wary of using China stuff because they feel like, okay, if China is controlling everything, the data, at least it goes to the US and not to China from a European perspective. And in that regard, people might think, okay, if it's open weight, it's not that much of a problem because I can still somewhat maybe host stuff myself. I'm just using sort of their, I don't know how to call it, software, but then that way, I'm more independent, but I still get to use these models which are cheaper, which are just as good. Maybe something like this, and I don't know what then China's intention behind all of this is. Again, I'm not sure if they're just trying to go against the US in that sense, and they see it as another way to maybe put a wrench into the machine. I don't know.
Well, I think they leverage economies of scale. I think they allow for innovation at a level that can compete with the US, because if it was not open weight, they wouldn't be able to do it. But also, depending on what distillation really is, to some degree, if you still steal, I don't want to say steal, if you distill a Western model and then give it away to everyone, are you is that Robin Hooding? I don't know what that is.
Yeah. That's a good question. Yeah.
And then you've got who are the other contenders? I mean, the only other contenders were really France. And I think France has now dropped out because it's been priced out through the hyperscaling war. And it's interesting that they are now, Mistral, I think last I read, was focusing more on sovereignty as well. So again, very French, very much like we're not going to win the AI hyperscaling war, but we're going to ensure that there is an option out there for corporates who don't want to just be part of the blob, right? So they can, if you're worried about sovereignty, our models for you. You can run it on your own, system.
And obviously, this will be a niche if it stays a niche, and I would assume so. Is this something that you can, that you can play, because there's always going to be people who will demand that type of sovereignty. I mean, we've gone for almost an hour, and I want to quickly move over to. I want to go over to this stablecoin topic, because I feel like this is also relevant to all of this, again, I don't know if it's true, but if we have Bessent, he's the one managing the long end. Warsh is trying to keep the interest rate below the natural rate. So this works out. And then you have the regulation, Trump and his entourage who want to push for, they've already done the Genius Act. I saw some news just recently that Treasury proposed something regarding the Genius Act. Maybe you have some insights there. And then there's also the Clarity Act and just stuff like this, I think whose overall purpose is to foster stablecoin adoption, again, which might be important because of the bills discussion that we have, because these are the ones devouring all these bills. And yeah, how do you fit that into the whole discussion?
Obviously, I think stablecoins are really important. It's one of the reasons I started a dedicated blog, The Peg, following them. But increasingly, I just think stablecoins are a mechanism for statecraft by the US. The ultimate, purpose of them, I think, is to have the US to have its cake and eat it, in terms of ensuring that the world can still be a dollar user, but without the downside that countries outside of outside the US end up collecting all these treasuries to effectively create. So the Eurodollar system is ultimately a function of how people manage their dollar liabilities offshore, and that is one of the big demand points for US Treasuries sitting abroad. And I just did a column for the Telegraph about how I don't think a lot of people appreciate that coming into 2008, that was the point where foreign holdings of US Treasuries had tipped over 50%. And in the Bitcoin mindset, 50 is the key number, right, for control.
Yeah.
You can kind of hack the
51%
system
attack,
up to 51%. So if more than 50% of your treasuries and debt is owned by foreigners, they get to exercise a far more an overly influential kind of role in your politics, because they can basically, in the UK, boycott policy through bond vigilantism that they don't like and doesn't suit them, right? So you kind of lose control of how you manage a fiscal, framework, because in the era of worrying about foreign influence and media and all this stuff, it's crazy to me that anyone would be happily encouraging foreign ownership of your bonds, right? Because it is effectively giving voting power. Moreover, you can't tax holdings abroad. That's one of the weird sovereign quirks, is that sovereigns get to collect coupon and you can't tax those earnings, because the whole point is that, otherwise there's the repercussions of if you issue a 4% bond and then you tax it, well, then it's not a 4% bond and there's an ambiguity that is political. So on an international basis, you can't tax them. But when you issue them domestically, you can tax the revenue and the income from bonds, which gives the government a lot of power because it controls the interest rate through taxation effectively. So you issue a 4% bond, but you tax 20% of it. Is it really a 4% bond, right?
Yeah.
You're getting to recycle it. So how it connects to stablecoins is if you can create a system that pools all the treasury bonds onshore in your jurisdiction, issued by companies that you can tax, and they're issuing these liquid tokens. The world can use the tokens, but they don't have to hold the underlying. So you get the best of both worlds, right? That is the big vision. It allows you to, it claims back control of your kind of fiscal. You engineer fiscal autonomy again, and you take it back from so you maintain currency hegemony, but without the downsides. I mean, that's the vision. And I think Besant understands that more than anybody.
Exactly. With regards to Tether, the biggest holder. I mean, they are still sort of technically offshore, right? But they have built this entity in the US. Is that where they try to bring them onshore, or
Well, I think you have to start somewhere. So if you are remember, who is the big with stablecoins? Who are you competing against? You're competing with the entrenched incumbents, who are the banks, and you're not going to displace. It would have been impossible to get stablecoins sort of going from a domestic standpoint, because there isn't really a payments advantage that you can generate. And really the whole point of stablecoins is providing emerging markets and people with dodgy currencies that are badly managed, giving them the stability of the dollar and access to it, but without the downsides of being liable for, the problem with the Eurodollar market was that the way it engineered access to the dollar was through a system where you had to you had to trust these foreign institutions that they would manage their liabilities properly, and they didn't, and so they created too many dollars relative to the backing, and and basically went bankrupt, right? The beauty of stablecoins is that you can like engineer usage of the dollar without any of those concerns because you control the underlying. And so Tether is born out of servicing those needs in the emerging markets. And that is what gives the momentum to stablecoins. Now, obviously, to do that whilst you are challenging the banks, you're not going to be able to do that from the US, especially if you have a regime, like an administration that is hostile to Bitcoin, which is what, for the majority of the time that Bitcoin's coming, crypto's coming up, the majority of the regulatory kind of attitude was not positive, right? So you have to and you have to use external mechanisms to just bootstrap the whole thing. But I think now that it's been bootstrapped, you see that Tether has increasingly, migrated back on shore. They're trying to I call it sort of like the Michael Corleone effect where, we're trying to go legit and soon enough, yes, they're based out of El Salvador. I think that is currently useful for them because to maintain market share in emerging markets, I think there's still a lot of people out there who don't trust the US government. They want access to the dollar without like the compliance, right? So being in El Salvador kind of creates a sort of an ambiguity over who they really serve, right? That said, with Tether increasingly under the thumb of the Treasury and freezing Iranian stablecoins, Venezuelan stablecoins, I don't think there's any. I think that ambiguity has gone out the window now. So there's the upside of being registered in El Salvador now is diminishing massively because they're obvious. Now, I would imagine they maintain the El Salvador listing for as long as there's uncertainty over who takes over after the Trump administration. Because if you get a hostile, crypto administration, it's a hedge against whatever happens politically, I think, in the US. So at the moment, they have the best of both worlds. They have El Salvador, but they also have subsidiaries, in the US. They have Howard Lutnick. And they're now piling into the gold token market as well. So who are Tether really is the question. I mean, who are they? I kind of think they're a bit statecrafty in their own way. And I think a lot of what they do is done with the blessing of the US government.
What do you think, what's the importance of the Clarity Act in all of this? I mean, the Genius Act was it more catered towards stablecoins? And what about Clarity now? Because from what I can see, there was high chance earlier in the year that this would pass. Now we're down to maybe 20% on polymarket odds, and so a lot of people are like, okay, might not be coming. Then some insiders and crypto people feel like, no, it's obvious that this will come. But yeah, what's the relevance at all? And do you think it will pass or like?
So I think Genius, either way, establishes framework for stablecoins. Clarity is really about what degree stablecoins can kind of benefit from the wider crypto ecosystem, and to what degree, the most important part of it is to what degree they can enhance yields, right? And compete with banks. And banks are very concerned about this because naturally that's going to eat their lunch, and they would have to. For example, GSIB banks. It's amazing to me that the average deposit that they have under a year, they still pay 0 interest on it. Like that to me is, as a European, that's insane in the current interest rate environment. It's like, okay, we don't get much interest, but we do get interest on deposits, right? And that reflects the power of the GSIB banks in the US. They have so much liquidity, so much access to float. It's their last domain, though, in terms of where they have a real advantage. Their license gives them a real advantage over this float. And if stablecoins come in, because everything else they've been kind of outcompeted on, like whether it's, a lot of their other profit centers have since 2008 been kind of purposefully outcompeted by opening up the markets. So float is their last real monopoly. And if you engineer stablecoins, and those stablecoins can start breaking up the kind of emerger around not paying depositors, because they suddenly engineer a scenario where you can have liquid float, which also pays interest because it responds so dynamically to supply and demand for liquidity. That's a threat to the banking system. Like, it basically unhinges their last monopoly. And I think that's, so what we're seeing with clarity is just the lobbying power of the banks.
Do you think it will be defeated, or do you think they will stand their man, and kind of like, hold their own?
I have a feeling, and I haven't thought about this at length, but I have a feeling if it is defeated, a lot of that business will flow to somewhere like the UK. And I think the UK, weirdly enough, has now positioned itself to be the stablecoin, just like the Eurodollar market. Yeah. So I think that's the hedge, because the UK, the UK was for a long time didn't do anything on stablecoin regulation. And the last year it's been coming up with its framework, but the framework that got all the press attention was its sterling stablecoins. And to be honest, sterling stablecoins are going to be a tiny part of the market. Like, it's just almost not worth talking about. But that was the focus of the whole regulatory framework. And what was missed in the narrative is that at the same time they basically admitted that they would default to US norms for stablecoins in terms of regulatory approach, but not in terms of yield or anything like that. In terms of the core kind of like on issues like multi-issuance and which jurisdiction, So for example, the EU is very anti facilitating access to US stablecoins, whereas Britain is going to happily facilitate them and take the lead from the US in terms of how they regulate them. So Genius will be the regulatory regime that the UK takes influence from, but it will also be able to navigate through its kind of command of offshore networks and whatnot. I wouldn't be surprised if some of these kind of enhanced yield products will be more easily provided, even if the US bans them.
Yeah.
Because we have enough. I don't know. We'll see. Maybe Switzerland as well. Switzerland's funny because Switzerland obviously has very low rates. So stable coins don't really work in Switzerland. But you do have like something called Frankencoin.
Yeah.
I don't know if you've heard of it, which I've hilariously named. But apparently it's named not just because of the franc, but because it takes its inspiration from Frankenstein, because Mary Shelley was a libertarian. I have no idea. But it's a loss-leading proposition because your rates are so low. So it's very difficult. So the idea is so as far as I understand, because the Swiss stablecoin can't make money from the usual interest arbitrage, they're going to, that seems to me like another jurisdiction that could enable yield enhancement.
Yeah, no, that's right. In Switzerland, it's kind of tough. Frankencoin is kind of a decentralized project, and also because regulatory wise, I think we're not that well positioned when you want to run a centralized stablecoin as of yet. I think it's being worked on, but you're right. It's really the yield topic that has kept Switzerland from bringing something to market, because that's Frankencoin's sort of message. They're like, Swiss franc is an export hit. Everybody wants the Swiss franc, and so if you can get it on chain, it might be demanded as well. But I think the S&B might not be so happy if all of a sudden like a decentralized stablecoin would cater to all the masses and then grow up to some value. I don't know if the founders would have some sort of phone call by the presidents of the S&B, even though.
Who knows? But it's very difficult to control because it is decentralized. So
exactly.
Once you have a funding currency that is a Swiss stablecoin and its USP is just stability, then what
it's going to be very interesting. Because
you can use it in decentralized markets for
Yeah.
staking and for yield
Yeah.
enhancement very easily.
Exactly. And from what I know, from what when I looked at it, it is actually very decentralized. They're like truly so, like usually DeFi stuff, there's like these back doors and so, and with the Frankencoin, from what I can tell, even they don't even have like an Oracle system. They do it through some type of auction system. So that's very neatly and nicely designed. Well, I mean, I think we're out of time. I wanted to ask you some stuff on the financial statecraft and how you think about this, but maybe we'll do this another time. So yeah.
'Cause otherwise, we're at risk of a 3-hour podcast, which is
Yeah,
look,
exactly.
there's so much to talk about. That's the problem. But
Yeah.
financial statecraft will be there for the next time if we ever speak again.
Yeah. No, that's great. Yeah, thanks a lot, Isabel. And where can people find you nowadays? You said the peg, the blind spot on Substack, and then I guess you're on X as well, right?
I'm on X at Isabella Kaminska. I am on the Substack. It's Mind the Blind Spot, because the blind spot was taken by the time I migrated there from my other site, which was on WordPress, and it was terrible, so I had to shut it down. And then the peg is on thepeg.co, and I also have a column in the Telegraph, so that's where you can find me.
Yeah, great. Yeah, thanks a lot for taking the time. That was amazing, and hope to speak to you in the future again. Enjoy. Bye.
Take
Thank
care.
you.
Bye.
So that was my show with Isabel Kaminska. Very great that I finally got Isabel onto the show. She's just such a great thinker, and yeah, she's so contrarian, but not like for the sake of it. She really just analyzes market and then every now and then comes to another conclusion as the mainstream narrative. And that's why I really much like her, and despite her contrarian takes, she still has that big following and a large audience, which just goes to show that a lot of people like her and kind of value her opinion. So I just really am really glad that I finally got her on the show. I hope you liked it. Obviously, I will have to get her back on. I wanted to talk to her about the whole statecraft thing. It's really my belief that we're moving from a Fed era to a Treasury era, and you want to be watching the Treasury more closely, which is just becoming ever more important. And yeah, also how stablecoins could potentially strengthen this case, corroborate everything. I wrote an article on Substack about it. Yeah, you have to go and check it out. It's really important stuff that's happening here. And so I will have to bring her back on to talk about this. Just quickly, I also really liked her framing of the Trump administration not acting from a position of weakness, but one of strength. I mean, I think a lot of people, the mainstream narrative, as she says, thinks, okay, they don't know what they're doing here. They're really acting erratically. But I think this is not really the case. I mean, they have a great understanding of the world. They have one of the smartest people in the administration, Warsh, Bessent, Miran, you name all these people. And so they really know what they're doing. Obviously, I am somewhat of an Austrian economist, and I'm being reminded every now and then of this great book by Eugen von Böhm-Bawerk. In German, it's called Macht oder ökonomisches Gesetz, and this translates into English maybe law or control or economic law. And it really asks this question, which one is stronger? And he comes to the conclusion that at the end of the day, it's always economic law that will prevail, and even if you try through politics, exert control, at some point you will fail. And I guess the same will be the case here, like Trump and Bessent, even though they know they have a great understanding of the world, they're not bigger than the market itself. But then again, I think it's really important to understand what they're doing here, that they have a master plan and they try to act on it. And so, yeah, the same goes for these Treasury buybacks. I'm recording this little video here just a few days after we recorded the episode with Isabel, and a lot more news came out, about the TGA, the Treasury General Account, that they want to decrease it, cash out some of the money there, stockpile money. And I think this goes to show that Bessent has this whatever it takes moment right now, and to quote Draghi's, whatever it takes for all the Europeans here. And he will try to save the long end and try to get it under control. And yeah, markets will keep on revolting. That's what I believe as well. But he has so many toolkits, and the TGA is one of them. And it is somewhat problematic, that's for sure, by if you go and issue short-term bills on the short end, and that's the way you try to raise money, then you run into faster rollover risk, because these bills come due faster, and so you have to fund yourself again, and then you go through bills again, and this only exacerbates the problem. Or you can have a stockpile of money in your bank account, the TGA, but if you run this down as well, then you don't have that cash cushion left anymore. And that's interesting, because Besson back in 2025, in September 2025, said exactly this. We need this cushion, and now he wants to draw it down as well himself. And so it just goes to show that he's trying to pull all these levers, and we'll see. The market will probably not like it, and it's going to be this ongoing fight, which just goes to show you have to look to the Treasury, and which is more important by now in this age of the primate of the Treasury than the Federal Reserve. And this was definitely established with Isabel in that interview as well. So thanks a lot for watching. Like it, give us a thumbs up, share it with your friends, and until next time, we'll have many more things to come. So thanks a lot. Bye, guys.